Welcome to Business Insights. I'm Mr. Kerridge, and today the focus is finance. And I'm delighted to say we're welcomed by Billy Williamson, who's going to share some of his experience and expertise around some of the topics that our students tackle as part of the finance module. So thanks, Billy. Thanks for giving up your time. We appreciate that. Just as a starting point to kick off, could you just provide the students a little bit of background in terms of your experience and expertise?
Yes, certainly. Thanks for inviting me today. I guess it's good afternoon over there for your students. I've worked many years in finance. In fact, my career goes back to 1965, would you believe, when I started with Cummins Engine Company. They're a multinational company. Their claim to fame is they're the largest independent diesel manufacturer in the world. I started there as a commercial apprentice. My claim to fame was I was the first commercial apprentice to be appointed in the UK by Cummins. So that's my claim to fame. The commercial apprenticeship involved 4 years going around every office discipline, which was a good background for my future career. The final year of the apprenticeship, I specialised in what I always wanted to do, was finance. The next part of my career was in all sorts of roles within finance, apart from 3 years where Cummins put me into the position of industrial relations manager for 3 years as a management development move. In 1985, I was appointed financial controller of their remanufacture division that was based in Cumbernauld in Scotland. And that was my first insight to the whole gambit of finance. In 1987, I was then appointed financial controller for GL Holdings, which was an acquisition Cummins made to get into what we call the all makes manufacturer. And that again broadened my experience, gave me expertise in acquisitions and disposals of property, etc. We covered every aspect of finance. In 1992, I know I'm still going back here, I was asked to create a focused accounting site. And I was based in Darlington then. I was sent to Darlington in the northeast of England. And the focused accounting site was really creating systems that would provide a shared service to every Cummins entity. And it was a forerunner of what we came to know as Cummins Business Services. And Cummins Business Services, we performed the general ledger, accounts receivable, accounts payable, fixed asset accounting for every Cummins entity in the UK, of which there were 6, and every Cummins entity in mainland Europe, which were 10. So that was my role.
Some great experience and expertise there in terms of how your career obviously evolved over that period. Just in terms of your role as a financial controller, can you just explore that a little bit further in terms of what a typical day would look like for you, and maybe what some of the things you found challenging but some interested in as well in terms of you enjoyed about the role?
If I look at the role of a financial controller, then first and foremost is to help the business make money, because if the business is not profitable, then you won't survive. You're also incumbent on you to meet all accounting standards. You ensure the day-to-day transactions are performed accurately and properly. Part of your day is spent keeping the executive team, the other management team of the company up to date on any financial matters. Obviously, we're producing financial statements on a timely basis. Training and developing of your own staff is very important and key to the future of the company. I also get involved in recruitment of staff. The other thing I listed was customer and supplier facing. That's collecting debts, paying bills, keeping the business moving, presenting results to staff and management of financial results and analysing them and explaining them to them. And the very important one, and the last one I added as the role, was to comply with the auditors. And most people open their eyes at that, but unless you comply with auditors, let me tell you, your life's going to be hard. My normal day to day, and one point I don't know if it'll come as a surprise to many people, but the higher up you go in the organisation, the more meetings you attend, and I always find that most frustrating. So my normal day towards the end of my career would be checking emails, responding to emails in the morning, responding to customer requests, making presentations, which I always enjoyed doing, training the employees, checking all internal controls. Towards the later life, we were hit by, no doubt your students know about Sarbanes-Oxley, that focused greatly on internal controls of a company to make sure that there was no fraudulent activity. The afternoon, as we were a multinational company, reported into the States, and they came alive after 1 p.m. in the afternoon. So invariably, I was involved in teleconferences. And also any systems. We operated our Oracle systems for financials, and invariably there might be bugs or hitches in it, and I always got involved in trying to resolve them with the systems department. For me, I still retained the best part of my job was actually when you closed the books of accounts. That's what I always found interesting. Reviewing results, seeing how the company performed, and trying to analyse those results and helping people understand it. So that always was the best part for me in the role.
That's really, really insightful. Thanks for that, Billy. Just in terms of your role, you talked about your experience there. In terms of qualification, in terms of being a financial controller, did you actually have to do any particular qualification which give an insight to our students?
Oh yes, you need a professional qualification. In the UK, there's 3 main ones and 1 lesser one. The 3 main ones, if you wanted to go into auditing and check bookkeeping, it was the Chartered Accountants, which is ACCA. The other main one was the Management Accountants, CIMA, that's the Institute of Management Accountants. So you needed to qualify there. And the third one was the Association of International Accountants that the UK recognised as well, which is the AIAA. There was a lesser one called Accounting Technicians, the AAT, but that gave you a foothold into senior posts. Maybe not the controller level, but a senior post within finance. And to accompany that, you needed at least 3 to 5 years work experience.
Really, really useful for our students to understand in terms of both the experience part, but also the qualifications. You mentioned there, you alluded to this management accounting. Can we just draw a distinction there based on your experience, the difference between management accounting and financial accounting, and what that distinction is?
The financial accounting, as I guess the term implies, is preparing and publishing the results of the company, the profit and loss statement, the balance sheet statement. Management accounting is then getting into what the numbers mean, analysing the results, looking at the cost pricing variances of the company and reporting those variances, and also get involved in budgetary control and working with other areas of the business. So that's the kind of main differences, Matt.
In terms of then looking at the final accounts, in terms of the profit and loss account and balance sheet, obviously it's an area that our students find particularly challenging at times, but also really, really interesting. What's the distinction there between the profit and loss account, the statement you're producing there, and the balance sheet, just at a simple level?
Yeah, the profit and loss statement, it covers a period of activity for a business. It may be a month, a quarter, or a year. And it includes all the income and expenditure of that business. So it's what's happened during that period of time. The balance sheet is really a snapshot of the business. It's only good at that point in time. And it lists the assets, the liabilities, and the capital of the company. In essence, what it shows is what the company owes and what it owns.
Just in terms of looking at the balance sheet and some of them fixed assets that you'll obviously be aware of, what does that mean in terms of depreciation? Because our students will cover a topic called depreciation and depreciating fixed assets for a number of reasons, wear and tear. What does that look like in practice in terms of getting involved with depreciation in your role? And what sort of methods did you use? Because our students will come across things such as straight line method and reducing balance. But actually, in a real organisation, in terms of depreciating assets, fixed assets, what does that look like? You know,
if you buy a car and you try and you sell it 3 years down the road, you'll get a fraction of what it cost you. And depreciation really is reducing the company's fixed assets to reflect their current value, well, as near as possible. And you're right, there's a few methods that companies use. The most common one is the straight line method. If you buy an asset and it's going to last for 5 years, you would depreciate it a fifth each year. So it's a simple straight line method. Other ways you can depreciate is units of production. If you buy, particularly when it's machinery getting used on a day-to-day basis, if you buy a machine that's going to produce 100,000 units over its life, then you can depreciate by many units per year it uses or per period it uses. So that calculates your depreciation on a units of production. The diminishing balance method, you normally apply a fixed percentage. So you're going to write it off at 10% per year. So it's 10% of the value you depreciate each year. There's another one that some companies use, and it's really for tax purposes. It's called double declining balance. And it's really, you take straight line method and you double it. And so instead of depreciating £1,000, you would depreciate 2,000 in that year. So that's the kind of four main methods of depreciating an asset in the company.
In terms of the impact then for the profit and loss account and balance sheet, just at a simple level, when you do depreciate them assets, what's the impact in terms of profit and loss account and balance sheet?
Well, your balance sheet will show your original value of your fixed asset, and then your accumulated depreciation. Then that equals your net fixed assets. So that appears in your balance sheet. Within your income statement, you'll have a line called depreciation that's a charge against the profit. So a monthly charge would show in your monthly, a quarterly charge in your quarterly statement, and an annual charge in your yearly result.
Yeah, that's really useful for the students now to understand the impact in terms of both the balance sheet and the P&L in terms of depreciation. Just shifting on a little bit then, now we've got an understanding what the P&L is, what the balance sheet is, this idea of depreciation. In terms of actually using financial accounts, who's some of the stakeholders that be interested in financial accounts?
First and foremost, your shareholders would be interested because they've put money into the business and they expect a return. So they'd be looking at what the dividend prospects are of the business. So they'd be looking closely at your profit loss statement and your margins there. Any potential investors, they'd be looking, is there an earnings potential within this business? They'd be looking at the balance sheet and your profit history over a number of years. The management of the company, obviously, to help them plan and control the future. Your employees, they're interested in the results because, particularly in today's environment, most companies would go into a bonus earning situation. So they want to know, is the company performing? Are we likely to get a bonus? Is the company, the longevity of the company? Am I going to be employed for a number of years here? Am I comfortable? Then you've got the external people like the company's house. If we have a legal obligation to file your accounts and results with the company's house, you've got creditors. They'll be wanting to know that they can get paid on time, so they're interested that you've got financial strength in your company. And then if you're listed in the stock exchange needs any listing of securities, etc. So they're interested in your balance sheet as well. So that's the main people interested, Matt.
Just you mentioned one point there. You mentioned dividend, and our students cover this in terms of what dividends are. But for the students that have not explored that yet, they'll be watching this. What do we actually mean by a dividend?
Dividend is a return on shareholders' investment. And it's obviously based on profits. The higher the profits, then the more dividend a company can pay to its shareholders.
Do businesses have to pay that? Can they choose not to pay that dividend? What's your experience there?
No, they don't. And then there are two types of shareholders. There's preference shareholders, and they need to get paid their dividend. Then you've got ordinary shareholders, and no, they're dependent on profits. Or if the business said, we'd really like to use the money for something else, we're not going to pay a dividend this year, then it can do that. The likelihood is the shareholder would look elsewhere, of course.
So we mentioned obviously profit. I think we can't leave this call or this meeting until we mention cash flow, because one of the things that are misconceptions with our students is the difference between profit and cash, and really why it's important to draw that distinction for businesses, because obviously typically students will hear that cash is king, and obviously cash shortfalls is one of the main reasons why businesses fail. So just from your point of view, why is it important to draw that distinction between understanding what profit is but also what cash flow is?
I think it's in simplest form, profit is the operational result of the company's performance. Cash flow is the ability of the company to generate cash. Because remember, without cash, a business can't or will have very big difficulty operating, because they'll be unable to pay their creditors who will stop supplies and the business will go into a halt. They'll be unable to pay their employees, so there'll be strikes, etc. associated. A cash flow statement tells the men where the money goes, where it comes in. So it's all about where the cash is in the business.
In terms of that movement of inflows and outflows and why that's important to draw a distinction between profits. So thank you for that. Just finally then, I think that's been really, really useful in terms of your background being a financial controller, what that is in terms of your experience and obviously the qualification in that area and some of the daily activities you were involved in. You know, financial accounting, management accounting, profit and loss, balance sheet, a bit of an insight to depreciation and what that looks like in practice. And then in terms of interpreting the account, in terms of different stakeholders, and then just finally drawing this distinction between cash and profit and the importance of understanding that. So thank you. But one of the things I just want to finish with, I think it's really useful for the students because a lot of our students have got a real interest in finance when they're studying business management. Obviously, it's one of the modules we focus on, and a lot of them want to go further on in terms of further studies and careers in finance. In terms of, from your point of view, if you're giving them some advice for somebody looking for a career in finance, what sort of advice would you give them in terms of things to consider?
That's a really good question. I think if your students feel they've got strong numeracy skills, if they've got an analytical mind, if they're good at managing their own money, then that's a good starting point for them. What I would encourage them to do is to have in their mind what role they want to do in life. Do they want to go into auditing? Do they want to go into financial accounting, you know, producing the statements? Is there a preference to analyze the numbers and the financial analysis work? Or do they want to go into taxation, which is another area of finance? So I think you need to be clear in your mind which part of finance you want to go into. And then you have to get yourself qualified. And the qualification will reflect the area of finance you want to pursue. So that's what I would recommend the students to do.
A great takeaway for them. I think the key headline there was, first of all, understand, manage your own finances, and then take it from there in terms of the areas you're interested in. So for the wider audience watching as well, in terms of financial literacy, I think it's a really, really useful point. So thank you for that. I won't take any more of your time up. Really, really appreciate your input. I know the students will benefit from this, and anybody else is watching the wider audience. In terms of them just getting a starting point in terms of the finance module, and then start to tackle and pick some of the topics that they look at. So thank you, and hopefully at some point we may be able to get you back, and students can ask you a few more questions, unpick your experience and expertise.
Yeah, no problem with that at all. It was good to participate.